Welcome to the RSI Trade of the Day. My name is Benjamin Poole, head trader here at Verified Investing. Today, you guys, on semiconductors, we're going to go over the trade that happened yesterday. When I had mentioned this trade, it wasn't based on any RSI or anything like that, but the RSI just continued to melt down. I'm going to show you guys how you can tell a strong stock from a weak stock. On semiconductors was a weak stock yesterday, and you'll notice that it never got back to or above the 70 on the RSI. Something to kind of pay attention to. If you guys are looking at the intraday charts, you're looking at the 1 minute or the 10-minute RSI, a lot of people think that as soon as it drops below 30, wow, it's oversold. Now is a great opportunity to buy. Well, on semiconductors is a great reason why that's not necessarily the case. The trade didn't play out. And let me kind of rewind and let you know, when I mention that this is the trade of the day, I mean that this is a day trade. So it's got to happen within the first, hour and a half, 2 hours of the stock market being open. And ideally, if we're looking to go long, I want it to flush into a level. Without that kind of flush into a particular level or up into a level, you're not going to have the same reflex bounce. And with on semiconductors, you can just have this slow meltdown. And again, the RSI is crazy on semiconductors on the 1 minute chart, just a continual flow down. So let me go ahead and oh, that was the wrong one. Hold on. Here we go. Here's the recap. Here's on semiconductors. So here is the trade that I said $49.54. It slowly melted down, but I want you guys to notice what's going on with the relative strength index. So you get this drop below 30. It even gets down to almost 20 or below 20 and then bounces, gets back up to the 50, gets rejected, gets back up. And as the price action continues lower, even though it's got positive RSI divergence, where a lot of people would say, okay, so now's the opportunity to buy. Yeah, you can get if you scalp this thing correctly, you can get a 1% bounce, 1.5% bounce. But look at this. You have this down sloping trend line and price action just stays below this trend line as the RSI continues even lower. And then towards the end of the day, institutional dumping just flushed the thing out into the 50% Fibonacci retracement into a secondary gap fill on the charts. So if you guys are looking at going long on semiconductors again today, let's go ahead and switch to the daily time frame. So usually when I see the RSI staying above the 70, that means that there's so many buyers in there. It's not always the same with sellers because fear and greed don't really work the same. So if you've got a bunch of greedy people and the RSI staying really high, there's usually going to be a lot of profit takers. But what happens at the lower end, you've got a lot of selling pressure. People get very scared, and then all of a sudden that thing can continue down. And so even though it does kind of give you this idea that there was a lot of selling pressure, and so now we should have a reflex bounce, it doesn't necessarily always mean that. So with on semiconductors, what you'll want to do is look at the 50% Fibonacci retracement, which is where it's at right now. This was the big gap fill. So if it doesn't keep a bounce above this or doesn't stay above this high pivot area, what I would look for is this gap fill right here at $41.34. So if you were going to trade this, I would look in between here for a potential long. You could even try the 618. But this would be more of a swing trade if on semiconductors does come down to the 618, in between the 618 and the 75% Fibonacci retracement. Okay, so now let's go ahead and look at OKLO. So here was a trade that I took in the live day trading room with the members. Look at how the RSI action stayed above the 70. And look at how long it stayed above the 70. This means that over the last 14 candles when it started, that means that the buying pressure, the average gain on the green bar candles is greater than and significantly greater than all the red bar candles. And so what happened was, based on the fact that it's a really strong stock at on the morning session, I said, all right, well, if it goes up, I've got this upsloping trend line. relative strength index is really high. Here's an upsloping trend line. It already got rejected from that. So if it gets up to $78, that's probably going to get rejected again. And so what did I do? I took a short on it and took a nice decent gain on it. It was about 1,800 bucks. It ended up dropping a little bit more than that, but as you can see, OKLO is pretty strong. So it never gave really a good negative RSI divergence. However, you could see that it's a really strong stock. And so if you've got an overbought condition such as OKLO and it's staying above the 70 for a significant amount of time, eventually there should be a pullback. And so what you do is you look for resistance levels, and then that's where you could enter your short. Eventually, you will get a substantial pullback as long as you have some volatility. So the OKLO was up 6% when I started looking at it. And then it went to 7 and 8 and 9, 10, and just above 10%. And so that means that there's volatility in it and it's moving in a short amount of time. And that's what you're looking for when you're using the relative strength index. Movement in price and movement in the relative strength index. Okay. So just kind of something to keep in mind. Another one I was looking at is Joby. Joby had some really good negative RSI divergence. Look at this chart. I had an entry level at just above $21. This was yesterday's chart, $21. It got up to $20.90. And then look at this pullback. This was actually the initial pullback. But look at how the relative strength index stayed right about the 50 and all the way into the 70. So this shows you that, okay, so based on the fact that it stayed up so long, now we should get some sort of a pullback after another rise today. So look for a pop in Joby, maybe around the $22 level, and then expect a pullback. Now, it could go all the way up to this upsloping trend line that I have. It's hidden resistance. You connect a pivot low. This pivot low, that's on the 3rd of February, 2nd of February, and it was all the way down to $3.40. Hits this high at $11.93. So your next pivot top could be right around $25, which is actually a pretty substantial move higher. So if you get up another 17%, 16%, that's a great opportunity. But overall, the chart of Joby looks overly extended. And so I would anticipate a pullback today after a decent bounce. So look for around the $22 level to possibly enter a trade. Okay, so now let's go into American Eagle Outfitters. Same type of price action. Look at this. And I'm going over the daily charts because, you know, this is what I love. When I'm going over these day trades, I prefer to look at the intraday charts and see what's going on with them and seeing, okay, so what's been overbought or what's been oversold for an extended period of time, hasn't pierced the 30, and then we can target those. American Eagle Outfitters was up significantly on the day. It never got below 30. I was actually anticipating a much bigger jump today, but now it looks like it's trading around $12.94, and it was up to $14.20. So this wouldn't necessarily be one that would be on my radar just because it's already had its pop and it's already had a decent pullback, as you can see in the intraday. This was the aftermarket and this was pre-market. It got up to $14.20. And let's just take a look and see where that rejection came from. The only level that I'd be interested in playing it, if American Eagle Outfitters did get up to $14.72, that would be an intriguing level for me as a day trade short. Got this nice gap fill, huge red bar candle that it's still got to get through. This would be a pierce of this this top that it put in pre-market. And again, that would be the only level I'd be interested in. Now it's trading at $12.94. But this is the kind of pullbacks you guys can get, 7, 8, 9% on a run up. So if you guys are ever in a trade that's going against you, check out what the RSI is doing. Okay, so the RSI is staying high. Expect a pop, have an ad level at resistance, and then it's likely to give you a decent pullback in the day. All right, so let's go ahead and go over the trade of the day. Here we go. All right, so Nvidia has been really strong. It's actually got a topping tail on the weekly time frame, and that was from last week. It did have a decent not earnings. It had a decent run yesterday. It wasn't up significantly. Usually I like to target stocks that have been up significantly, but Nvidia was like 3 or 4%. That's not a huge move. I mean, it is a $4 trillion company. So, I mean, really, it is a big move for a $4 trillion company. However, I like to target stocks that are more extended than that. However, if it gets to double top on Nvidia, I am looking to short that. And let's go ahead and go over the chart and see why that is. So here is the move higher on Nvidia. So here's the weekly topping tail. If it gets up to this double top, this is my shortable level, $183.30. That would be my entry price for a short level. But let's take a look at the intraday. Look at what happened. This was yesterday's price action. Again, strong stock on the day, stayed above the 30, chopped. It did get as low as 35, but overall, the price continued higher. The relative strength index continued right about the 70. That gives you an idea that it's a strong stock on the day, and it's likely to pop in the next day and then likely to get rejected. And so here's what I'm looking at. Here's this upsloping trend line that connects the pre-market, post-market, and the trading day yesterday with a potential upside target of $183.30. I'm not going long into this position, but based on the fact that it's been overbought for a full day, means there's a lot of institutional buying pressure, could get some of these bulls back on the market. But once it gets to double top, I anticipate a decent pullback on it, $2, $3, $4 on Nvidia. The cool thing is it's a weekly topping tail. And so if you do end up getting in this trade at double top, you could just put a stop out at a daily closing basis above that, but just knowing that you've got a lot of resistance at that double top area. Okay. So you guys, thank you guys so much for tuning in and watching me live on YouTube. If you guys want more of this, I will be live every weekday that the market is open at 8:45 in the morning, giving you guys the insights that I see from the previous day and going into the continued day. So hit like, subscribe, and hit that bell so you can get that notification. And please stay tuned. Gareth Soloway is going live at 9 a.m. and that starts in less than 2 minutes. So we'll see you guys next time in the charts. Take care.